This is Japanese Economic Review Channel. Welcome to yesterday's market briefing for June 11th, 2026. Yesterday was defined by extreme volatility and a remarkable display of resilience. While we faced significant downward pressure from overnight global cues, the Tokyo market managed a dramatic intraday reversal. This session highlighted how sensitive Japanese equities have become to geopolitical timelines and the shifting macro environment. The numbers tell a story of divergence. The Nikkei 225 eked out a 38 yen gain to close at 64,217.27, while the Topix fell by 17 points. Notably, the NY Dow closed below the 50,000 mark for the first time in 3 weeks. Despite the Nikkei's positive close, market breadth was weak, with nearly double the number of losers compared to gainers, suggesting that the rally was concentrated in specific heavyweights. The primary catalyst for the early sell-off was a geopolitical trigger. A social media post from US President Trump regarding Iran's stalled ceasefire protocols, signaling potential penalties. This caused crude oil prices to spike, reigniting inflation fears across global markets. High-tech components bore the brunt of this contagion, with major players like Qualcomm and ARM Holdings seeing heavy sell-offs. The Nikkei's performance was a classic V-shaped recovery. After a heavy opening sell-off following the US drop, a critical reversal occurred at midday. The news that the US military had completed its new strike on Iran provided the relief rally the market needed. This cleared the air of uncertainty, allowing the index to peak at 64,395 by early afternoon as short covering intensified. We saw a stark rotation into defensive and inflation-hedged assets. Green zone performers included mining, INPEX, and energy, INEOS, alongside stable defensives like food, Ajinomoto, and shipping. Conversely, the red zone was dominated by export cyclicals like autos, Toyota and Honda, and financials, Nomura, which remained vulnerable to macro shocks and the yen's continued weakness at 160.50. The TSE Growth 250 index finally snapped its 4-day losing streak today. Following the Nikkei's lead, it opened with a steep drop but steadily erased those losses to close in positive territory. Key movers included PowerX and Trial, which attracted buying interest, while stocks like Genda and Timee faced continued selling pressure in this risk-sensitive environment. Beyond the macro noise, corporate Japan is focused on seasonal execution. We are seeing a surge in cooling-themed product launches. Meiji is launching Deer Milk Suzumi, and Conro is introducing new cooling salt candies. Additionally, Haruyama is expanding its functional cooling apparel. This demonstrates how domestic companies are strategically pivoting to address the immediate climate realities in Japan. Execution remains robust in technology and infrastructure. Mitsubishi Motors is preparing for its 2026 North American EV launch, and Shimadzu is expanding production in China. Furthermore, companies like Hitachi and Totocorp are advancing VPP and HVAC diagnostic trials. These moves suggest that while markets are hypersensitive to headlines, underlying corporate expansion and AI integration remain on track. In conclusion, today was a case of geopolitical whiplash. The shift from uncertainty to finality provided the exact inflection point for the recovery. Investors should note the clear rotation toward inflation-hedged assets and the ongoing resilience in corporate operational continuity. Moving forward, the ability to filter out geopolitical noise and focus on these structural trends will be the key to navigating this volatile landscape. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.